NCLH, the entry was opening range highs. The primary entry was here, 1680s, and then you had a secondary entry in the, let's say, the 5-minute opening range highs, 1780-ish. So those were the entries. If you bought any higher, you are in God's hands. So I hope you're following the opening range highs rules, guys. Like on a setup like NCLH, for example, I didn't trade it. Now I'm not getting any charts, but okay, here. So any of these, like any of these airlines or cruise lines, but I'm taking NCLH as example because this is the one that's most range. Like this thing gapped down, what, 15%? Well, no, 20%. And the entry was opening range highs, right? So, you know, that would have been a red candle since it's down 20% on a day. So on these kind of bounce plays, it's pretty much the reverse. Like I talked about this kind of setup in my video that's pinned on Twitter. I hope all of you have watched it. If you haven't, you should go and watch it today to get the most value out of the stream. This is the reverse of my parabolic short setup. It's like pretty much the reverse of Nikola, right? You have a stock that's up multiple days, a lot, getting really extended, and then you short it. It gets this parabolic gap up, this exhaustion gap up, then you just short it opening range lows. NCLH is pretty much the opposite of that. It's the long version of that same setup. Very easily, just wait for the setup, buy opening range highs, sell some into pops, and hopefully maybe this thing can bounce back to low 20s by, you know, next few sessions, hopefully. So, you know, it's really not rocket science. Very simple setup. Am I thinking? I don't know. I mean, I don't think they're gonna bounce back to like the highs that we saw 5 days ago. I mean, not at least in the short term, but in a short term, I mean, they could very easily bounce back to like where they were yesterday, like yesterday's highs. But that's why you have stops. That's why you sell into pops and trail the rest. You don't need to do any predictions. All you have to do is wait. This chafing yesterday is a little bit annoying. Like I saw this setup, I saw it midday when it was starting, looking about to top out after, you know, it was up like 900% on the day, and I saw it like right here. I tried to locate 25,000 shares and there was no locate available, and then it just cracked, retested another time, and then boom, went down like what, almost 80% intraday from that level. I was looking to short it. Super annoying. There was no borrow. Now I wouldn't have held it all the way down. I would have probably covered it all like mid-teens or something, and then it went down another 50%. But still, a little bit annoying. Shorting is a hard game. Timing has to be perfect, otherwise you're gonna get killed, and many times you can't get a borrow, and sometimes the borrow is extremely expensive, like on Nikola. D-Dog gapping down slightly. This is my biggest position. Like I've sold a quarter or so of it, and it's still almost a 1.4 million position. So it's right now not by far my biggest, but definitely my biggest position. But it's acting well. It's holding above the moving averages and not gapping down very much. Twilio, another one I bought on this break here yesterday on the high tide flag break. I sold about a quarter into the close. Now it's gapping down. There's a good chance it stops me out, but again, the reason I sold them very aggressively. I usually don't sell on the first day, but this time I did, since I took on some decent exposure, and again the markets are extended, and I just wanted to play it safe, because we could go into a phase where things start go crazy. I mean, even crazier than they have been, because we still had some good setups. But instead we got a little bit of a rug pull, and that's fine. I'm ready for it. I have positioned for it, and it's called being aggressively defensive. You can be aggressive but still play defense. Wow, Zoom is a beast. This thing goes to 250, 270. I have no doubts. It's showing so much relative strength. Holy crap. It's like on its own planet. What's ACB doing? Yeah, ACB gapping down. I sold ACB yesterday near the close. It closed like 12 cents above my stop area, so I just sold it. You know, I have no patience with stocks that are not going up. There's no reason to sit here in positions that don't perform. This Livongo is actually setting up again. It held the range here in the 60-minute daily charts. It held the rising 20-day, and now it's starting to. You know what? If this thing tries to break out again in above this 62 area in the next few days, I think I'm gonna add to it. I think I'm gonna add another 10-15,000 shares to my existing 14,000 shares. There's no reason for a crash. Like, guys, crashes don't happen at the highs, okay? If you study every market crash in history, they usually start below the 200-day moving average, below the 50-day moving average. Like, I've never seen, if you go back and look at the market indices the past 50 or 100 years for the Dow Jones, no market crash started when the index was above the 10-20-day moving averages. So no, I don't think, like, could this be the start of a bigger pullback? Yes, but if you're like looking for a free fall type of a market crash, it's not gonna happen above the rising moving averages. There's just too much dip buying. So don't worry about it. Go and study market action, market behavior, and then you know, you'll see it for yourself. Then you don't have to, then you can turn off the TV, all these idiots calling for this and that, because you know that that's not how markets work.